I can't believe it wasn't that long ago when we were talking about crude oil in negative prices. The $100 magic mark seems to be just a bypass of a number. Now the talk is of oil, WTI crude oil going to $150. Now, off the back of what's going on in Ukraine at the moment, quite possible. But I'm going to have a look at the technical analysis, the charts, to see the likelihood of $150 being reached, and the numbers that you need to know about for WTI crude oil. So with that, let's get on with that analysis. Now, before I get into the regular weekly line chart, I wanted to take a look at some real history of the prices of crude oil, and I've taken this chart, it's a monthly chart, back to the late 1980s just to see the extremes of the prices. Now we can see in 2008 the price of oil did hit $140. I can remember that very well. I was working for a commodity trading company at the time, all very exciting, and you can see what happened to the price after that. Collapsed down to the $40 mark, a bit of a recovery, and really nothing special until early 2020 when we saw the negative prices. Remember, this is closing price, so it doesn't show the high lows of that period, but we can then see that decent run up that we're still part of at the moment as the price has broken through 90, and longer term Fibonacci's 112, the next one up, then 140, so 150 would break all new time high records, and the next Fibonacci after that's $176. So bring it back further to the weekly chart, the last 4 years of price history, we can see a sort of sideways move again, that 2020 bottom and the price trending up. The pink line, nice support there at the moment. It's a long way down if it does break there, sort of early 70 area. That yellow box is where a lot of the noise, price action, as you can see from the right hand side volume profile there, plays out. In the shorter term to the upside, it's still talking weekly, so it's still quite long term. $100 next up, then 112, then that magic 150. So let's take a look at a bit of sentiment based technical analysis. Down the bottom of this chart here we have seasonality, still remaining bullish until latter stages of this month, then starts to peter off till Easter time, and then again picks up through the rest of the year. Commitment of traders still playing a funny game up there at the moment. Price being driven up, the large speculators still coming down, which is a divergence which I wouldn't have expected here. So something peculiar there, adding maybe a bit of neutrality to the price and maybe just slowing the upside down a little bit. Another fundamental sentiment tool I look at is the Baker Hughes rig count, and I like to use the US line, and we can see the change from the prior count is plus 10 and the change from last year is plus 248, so all still pretty bullish there. So for those of you interested in crude oil inventories, the forecast number not out as yet. Last week's 1.121 million barrels was worse than expected. So for those that use these numbers, keep an eye on any outlying, actual numbers that come out on Wednesday. So the 4-line break chart can give you possible reversal entry points. Now I'm using a more aggressive one here, and even though it's aggressive, it's still a long way off, so also signifying that there's a bit of a pullback potential there as well. But I use a 2-bar reversal, and that comes in at $79, so look out for that as a potential entry point. I've used a daily chart here, which is a bit slower, so you could speed up possible more aggressive reversal points if you lowered the time frame. What's a daily high Kanashi chart giving us? Well, signals at the bottom warming up after a slight pullback, and volatility definitely picking up now, 34% per annum compared to its Longer term average around the early 20%. Volume breaking up in the positive through this longer term moving average as well. In terms of price, left on the green line with the 4 support points, which, you know, a serious pullback could see the price play around that sort of area, which is the early 60s. We talked about on the line break chart an entry around about $79. That's at the sort of bottom area of the pink and, you know, light blue shaded 2 standard deviation regression bands. The purple triangle there is showing the recent breakout, also supported by the 2 pink line box breakout setup signal strategy, where we've got a buy on at the moment. Price has been banging up and down between that 2 standard deviation trend area. It hit the top recently just over into those 90s and pulled back, and today's news on the Ukraine-Russian goings on just driven it back high again, stabilizing around the mean there. The Renko chart, a 50-cent block size used, takes us back to the late part of 2021. We can see that uptrend. In terms of the actual trend, the DMI down the bottom is positive, but the 2 signals above that in the negative at the moment. So just coming off the price from that, you know, recent up run to highs. Wait for that to turn round. You know, price is still trading above that longer term moving average, so all looking quite positive still there. And in terms of upsides, then on the Renko chart, 100 is the next stop, and then 109, and then 123. So definitely pushing on towards that 150 mark. And if it fails from here, it's got to get really through that longer term moving average. It's around the $85 area. Then 61.8% Fibonacci line, $76, then 38.2 at $70. But price may be consolidating at the moment, waiting to see what happens in the fundamental world before pushing on upwards. So on to the score, bullish overall, and to the top right, seasonality still strong at the moment. Commitment traders concerning neutral-ish, rig count strong, inventories neutral. Line break chart giving you a bearish reversal. Heikin Ashi pretty strong, bullish. Renko a bit more mixed, waiting for the turn and into the signals. Now the risk returns very high because of a tight stop, and it's 6.2 and 10.6 to 1 to the upside, and 2.1 and 2.6 to 1 to the downside. But overall, a bullish score this week. So let's get back to the original thought: is can Putin drive that oil price up higher to $150? Well, the simple answer is yes, he can, especially if things got more serious in Ukraine. There are some other underlying fundamental factors that can drive that price higher as well. And add on top of that the speculative market, then 150 is not out of reach. We saw the price not so long ago in the 140s. So yeah, 150 very possible. There are some other flip side fundamentals that could keep the price lower. Iranian oil, if more of that was released, that's $3-5, you know, down in the price at least. But technicals warming up once more to the upside. Let me know in the comments below what you think is going to happen next with the price of oil. Where do you target the price? 150, 200, or is it back down to those negative numbers? Let me know. Interested to get the discussion going. And if you want to talk more about this sort of thing in a lot more detail, then we've got a free traders club on Discord, and I'll put a link in the description below there, where we talk about pretty much anything to do with trading, and welcome all new members. Now, if you like today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive further notification. And all that's left for me to say is thanks for watching. Good luck with the trading, and I'll see you in the next video.